The US stock market wrapped up today with modest but meaningful gains, as investors digested a mix of strong economic data, fresh earnings reports, and ongoing trade tensions abroad. The Nasdaq was the strongest performer, closing up about 0.33%, while the S&P 500 touched a new all-time high intraday before settling slightly higher. The Dow Jones was mostly flat, but managed to close in positive territory. Overall, today's trading session reflected cautious optimism as Wall Street balanced resilience at home with uncertainty abroad. The spotlight today was firmly on the US economy. The government revised second quarter GDP growth up to 3.3%, well above initial estimates. That marks one of the strongest quarters in recent years and suggests consumer and business spending remain robust. Weekly jobless claims also surprised to the downside, coming in lower than analysts had projected. Taken together, these numbers reinforce the view that the US economy continues to grow at a healthy pace, even as inflation has shown signs of cooling. This combination of growth and cooling inflation has investors once again speculating about the Federal Reserve's next move. For months, markets have been pricing in at least one interest rate cut before year-end. Now, after today's data, traders see an increasing chance that the first cut could arrive as soon as September. Lower borrowing costs would likely provide further fuel for stocks, real estate, and risk assets, but Fed officials have continued to stress they remain data-dependent, wanting more evidence that inflation is sustainably moving toward target. On the corporate side, earnings once again stole the show. Pure Storage was one of the day's standout winners, surging nearly 30% after delivering results well above Wall Street's expectations. The company credited accelerating demand for its cloud and AI data services, sectors that have become hot investment themes throughout the year. Snowflake was another major winner, jumping 18% after reporting stronger than expected revenue growth and issuing upbeat guidance for the months ahead. Nvidia, the poster child of the AI boom, posted blockbuster numbers as well, with revenue exceeding $46 billion and earnings per share hitting $1.05. But despite beating expectations, the stock pulled back modestly, down less than 1%, after executives issued a more cautious outlook. In particular, Nvidia flagged weakness in its data center business and the ongoing impact of US restrictions on chip sales to China, two areas that could weigh on future growth. Even so, Nvidia remains one of the market's most closely watched companies, given its central role in powering AI technologies. Not all earnings reports were celebrated. Hormel Foods, the consumer staples company known for brands like Spam, fell more than 13% after reporting weaker than expected sales and slashing its full-year outlook. The decline underscored the challenges facing traditional packaged food companies as consumers trade down or seek fresher alternatives. Other notable movers included CrowdStrike, which gained roughly 3% on strong cybersecurity demand, HP Inc., which rose after upbeat results in its personal computing division, and Viva Systems, which edged lower despite steady growth in its cloud-based healthcare software. Sector-wise, technology and cloud-related names led the day, thanks to Pure Storage, Snowflake, and Nvidia, while consumer staples lagged behind due to Hormel's sell-off. Financials and industrials were mostly flat, reflecting a wait-and-see approach ahead of next week's key economic reports. In commodities, gold prices pushed higher, extending recent gains as investors looked for safe haven assets amid lingering geopolitical and trade concerns. Oil prices, however, slipped slightly, pressured by concerns of oversupply and weaker global demand. Treasury yields were little changed, with the 10-year note holding steady, while the US dollar also saw limited movement against major currencies. Globally, lowly, markets told a different story. In India, stocks fell sharply, with the Sensex tumbling more than 700 points and the Nifty 50 index dropping below 24,500. The sell-off was triggered by the announcement of new US tariffs of 50%, escalating trade tensions between Washington and New Delhi. The move raises fresh concerns about global trade policy, as tariffs could ripple through supply chains and weigh on growth in one of the world's largest emerging economies. Altogether, today's trading session highlighted the push and pull between strength at home and fragility abroad. The US economy continues to show resilience, giving the Fed room to consider rate cuts, while corporate earnings, particularly in technology, continue to drive market momentum. But the cautious tone from companies like Nvidia, along with growing trade disputes, reminds investors that risks remain. As September approaches, all eyes will be on the Fed's next policy meeting, which could set the tone for markets into the end of the year.